fast forward, which terrifies me, 25 years into banking and looking how tech is going to enable the future there. Of course, they're embracing technologies and they will be critical enablers for our digital future. They're not just following others, though. We are leading digital transformation in the finance industry. But of course, as we know with the regulators, that is a double-edged sword. On the one hand, we have the thrill of innovation. On the other, the bite of disruption. So we're going to uncover what the bold future of banking looks like. And I'm absolutely delighted to invite to the stage the panelists for this session entitled Banks of 2050, Enabling the Digital Future. So if I could start with Ronit Ghosh. He is the head of Future of Finance at Citi. Ronit is involved in the convergence of finance, money and emerging technologies. So come on up to the stage. He's also just written a book, The Future of Money. Brilliant, right underneath your picture. Pratik Vahi, Chief Commercial Officer at Wio Bank, 20 years of expertise driving the platform's customer-centric digital strategy. Welcome, Pratik. Miguel Rio Tinto, CIO of Emirates NBD, leading digital transformation over the past 25 years across not just this jurisdiction, but Europe, Latin America, and here as well. And this session will be moderated by Suvo Sarkar, the founder and CEO of 3D Advisory, and again, lots of experience, 36, and very much involved in the retail and the wealth management space. Over to you, gentlemen.
Good morning, everybody. Very, very warm welcome to all of you to this very interesting panel, I hope, on the future of banking. We have three experts here representing very different things. Ronit here thinks about the future all the time as a day job, working for the Citi Future of Finance Group. Miguel here, I think, worries every night about what's coming next. He's the CIO, Chief Information Officer of Emirates NBD, the largest bank in Dubai. And Pratik there is thinking all day long how to give the big banks a run for their money. He runs Wio Bank, which is the new kid off the block, probably the most evolved digital bank in the country and maybe the region. So we have an interesting panel here, and I'm looking forward to interesting discussion. Just to set the tone, I think three things that I want to set the stage with. One, if you think about it, banking is changing like never before. Three different forces are actually changing banking tremendously. One, of course, the technology is changing very fast, right? So AI is replacing humans, analytics is replacing normal bankers, and robotics is coming in as well in a big way. So technology is changing. That's one. Two, the customers are changing. We have to worry about not just millennials today, but also the Gen Z and soon the Gen Alpha. The requirements for banking are very different from requirements from people, baby boomers and others have come before them. So the customer requirements, customer preferences for banking are changing tremendously. That's the second force. The third and final force is the players themselves. It's not just banks who do banking anymore, but there are new banks like Wio, like Liv. There are fintechs. There are tech fins like the likes of Google and Apple and Meta who want to do banking. And there are things like embedded finance coming in. So you have technology changing, you got the customers changing, and you got the players changing. In that whole tumultuous ocean of change, banks and banking has to find its way forward. So my first question to set the ball rolling is to the author on my left, Ronit. You've written a book recently called The Future of Money. So I should ask you, what is the future of money? What do you see as the biggest change coming in banking? Will AI replace humans? Will there be branches? Will there be banks as we know them? Or will it be the likes of Apple and Meta running banking in the future?
Great question. Thank you for having me, Suvo, and plugging my book. So what is a bank and what is money is the first question you need to ask yourself. People often ask me, Ronit, you worked in banking for way too long. I've been in finance now almost 30 years. And your bank won't exist in the future. It's had a good run, 200 plus years, but thank you and good night. And I say, okay, maybe my bank won't exist in the future, but the bank I worked for has changed its name 4 or 5 times in my career. I never left my bank. I joined an old American investment bank in London in 1997. I just needed a job. I come out of college. I didn't want to live with my mother. Finance was growing in the UK. I fell into a job. 6 months later, or less than a few months later, got bought by another bank. A year later, we merged with Citi, and we became Citi. Then we bought an English bank and changed our name again. I think I worked for 5 or 6 brands. Banking will always change. In our careers, it's changed tremendously. There's a former Federal Reserve Governor, Paul Volcker, who said, and I think he was only half joking, the last good innovation in finance was the ATM. But since the ATM, we've had so many positive changes in finance, and it'll carry on changing. If Suva and I were on a desert island, well, God help Suva, but if we were just like the 2 of us, there was no one else on the desert island, we would not have a bank, and we would not even have money, because we would just do things for each other. Obviously, if we were on a desert island, that society would die very soon. But let's imagine the society scales up. We have 100 people on the island, and if we're not all related or best friends, you're going to need money. If we are best friends, you don't need money, because what is money replacing? Money is replacing social obligation, debt, social debt. And that's why money exists. So just as society grows and technology grows, money changes. When printing gets invented in China, we then get banknotes. Artificial intelligence, tokenization, and other buzzwords are going to shape our lives. 3 predictions about the future now. And you can come and tell me if I'm wrong in 10 years' time, or if you can find me in 10 years' time. Number 1, Siva mentioned AI. We are going to have a much more agent-driven world. In our personal lives, even though I've been in finance for almost 30 years, I'm terrible at managing my financial personal. At the weekend, I don't want to spend my time thinking about my mortgage or my pension or my mutual fund. None of us do. In big companies, there are whole divisions that handle this. In our personal lives, we're totally suboptimal. Agents would be amazing. Not autonomous, semi-autonomous. Basically, just like the internet and Google put the world's information in our hands, agents could tell us, hey, Ronit, your mortgage is coming due in 3 months' time. Here are the best offers now. Let's have a chat. Let me connect you to Emirates MBD or WEO or FAB or whoever. Semi-autonomous agents, that's going to be a big, big thing. And it won't be 30 years or 20 years. It'll be 3 to 5 years. Number 2, the infrastructure. And tokenization is going to be part of that. We're going to go from today 24/7 payments is table stakes domestically. I mean, 70 plus countries have real-time payments. We're going to have 24/7 finance. So that's prediction number 2. And prediction number 3, we're still going to be working in financial services. It may not look like a bank today, but what is amazing is that if you look back over the last decade or 2 in the US, the number of people working in finance, constant at 6% of the economy, of the workforce, hasn't changed. We have been through a mega tech revolution, social, technological, in the last 15 years. The number of people working in finance hasn't changed. The jobs have changed, and the type of firms have changed. So we're not going to spend a whole winter break on the beach in Dubai. Unfortunately, we'll still be working. It'll just be different types of jobs. It'll be different types of jobs we'll be doing. So those are the 3 predictions.
Thanks, Ronit. We'll hold you to those 3.
Come and find me.
10 years
I'll give you a free copy of my book in 10 years if you don't.
Your next book. Prateek, as the Chief Commercial Officer of Digital Bank here, I might say the most preeminent digital bank today, do you think digital banks are the future of banking? I mean, there are about 400 digital banks globally. Less than 5% of them make any profits. 95% are loss-making. Should we believe that digital banks are the future of banking? And why?
Good morning, and thank you for having me here, Subho. Good to be here. Look, the first question, I think, on profitability, right? If you look at the top 10 digital banks, the top 5 digital banks, they're growing much faster than any of the traditional banks. Like if you look at Nubank in LATAM or Chime, Revolut, compare them to the big banks, they're growing faster in terms of customers, in terms of profitability. So I think that kind of paints a clear picture in terms of what the future holds and what consumers are looking for, right? So, and they're getting market share also in most regions, right? In Europe, I think I read somewhere about 25% market share is now grabbed by the digital banks. I think what makes them successful is clearly the tech stack that the banks are being built on and how they can power themselves up to focus on the consumer. I think AI will definitely play a huge part in the success of digital banks going forward. It'll be critical for all other traditional banks to also adopt and change those the tech stacks that they have to kind of compete with the digital players. Some of the other challenges that around this will definitely be cybersecurity. I think that's the biggest worry when consumers think of digital banks. The whole trust element comes into play, and I think all the digital banks will invest heavily to ensure that, you know, from a cyber security point of view, they're very well equipped. The other play would be regulation, government regulation. So with the constant innovation, it's important for the banks to stay ahead and invest on that front so they can kind of ensure that they comply with all the regulations, as well as the innovations that they bring to the table can support what the consumers need. So I think that is key in terms of how the digital banks will kind of differentiate and grow. The other aspect is the whole, you know, the operating model, I guess, is changing with time, right? So what was, you know, relevant 30 years ago is now very different today. Banks are earning, the new banks are earning revenues in different streams that possibly didn't exist a decade or two ago. So I think these are some of the key things that will really support on the growth side.
Thanks, Prateek. Miguel, you are the Chief Information Officer of the largest bank in Dubai, Emirates NBD, and I'm sure you worry about this every single day. Technology is probably the biggest catalyst of change in banking today. And we are being hit by so many different technologies. There is AI, there is a blockchain, there is cloud computing, there is quantum computing coming soon, there's robotics, there's machine learning. I mean, for a person who's a layman, it's like hitting you from all directions. As a bank, which of these do you think are going to be the most impactful as we think of the future? And how do you, in your mind, as a CIO, prioritize what to go for?
Yeah, so I think Emirates NBD is a fantastic example of a bank that over the last 10 years, right, completely transformed up to the point where actually you're not just the biggest bank in Dubai. Emirates NBD currently is the biggest bank in the region, actually. So we have half the balance sheet of the largest bank, but we are the most profitable bank in the region since last year. And this has been a 10-year transformation journey. It's quite a large bank and successful. It's 15 million customers, 30,000 employees across 7 countries. So quite a large entity, but a very efficient, very successful entity. And at the core of that is a little bit the values of what His Highness Allama put forward, which is this ambition to transform, to innovate, and the relentless investment in technology and digital first, right? And we have been seeing, particularly from 2016 onwards, the bank has invested almost $500 million a year, constantly transforming its tech stack, looking at the best companies out there, the best technology companies out there, not just banks, but best technologies out there, and trying to, embed their stacks, their technology stacks. I can mention some of the things that are working for us. It's true, it's a complex world. There's always the last buzzword, but it's really, if you really want to transform, it's really, really simple, because the technology is being used by large hyperscalers, Google, Apple, and so on. These are very well known, right? Typically, banks struggle with having legacy systems. They have to transform, they have to adopt that, but this is something that Emirates NBD started doing in 2016. So from completely moving into cloud native, ditching many of the traditional legacy systems we had, from actually bringing in advanced analytics, bringing in the right technology to export data, right? Those things have been instrumental for us. So it's not just technology, right? If it was just technology, everybody could buy it and they could actually, become successful. It was a lot about, talent. We are in a country and in a city where attracting talent is relatively easy. So from everywhere in the world. So about 80% of the team I have in 2016 is new, so it's a completely new team. The team I have now, 80% are completely new. They actually, it's new talent onboarded. And the other thing is, on a large bank like Emirates NBD is the operating model, right? So you know that digital banks, they say they are, more agile, they take decisions faster, right? So how can we transform internally our own operating models so that we can take decisions as fast as them, and actually, innovate as fast as them. So I think those three things were the important ones. So technology, talent, and operating model. And in the technology side, of course, cloud native, bringing data, not so much these buzzwords of quantum and VR. This is still, maybe a different horizon altogether. But those were the things that make it work for Emirates NBD.
Thanks, Miguel. I'm so happy I don't have to deal with the complexities of your job, for sure. Prateek, a lot of futurists believe that embedded finance is a future, is like the blue ocean strategy for banking at the moment. We've seen, companies like Apple in the US trying to do it, Grab in Southeast Asia trying to do it, but banks have been slow to this. Do you believe embedded finance is the future of banking? And are you looking at this at VO?
Absolutely. I think embedded finance will become critical to every bank strategy to be successful going forward. Embedded finance, just to put it simply, is basically offering financial services in non-financial journeys. So, for example, if someone is shopping on an Amazon website, looking to buy a television set and needs finance, they can get offered finance in real time at the time of making that purchase. That's essentially what embedded finance, one of the examples of embedded finance are. I mean, and that could be extended into auto loans or mortgages or, essentially all other journeys where banks typically don't operate in real time. At VO, we're looking at this very seriously. We've launched a supply chain finance platform where we're trying to offer that to our SMEs who need real-time working capital access, can sign up with VO and get access through this supply chain platform and get funds instantly. We also offer services on our platform like access to Stripe, access to Zoho for invoicing. So while it may not necessarily be embedded finance, it kind of helps the SMEs access financial products. So yeah, I think going forward, consumers would want to have access to financial options in their everyday life, right? And it's absolutely critical that banks extend themselves in those realms, and that's basically the future. No one would want to come to a bank, and that's pretty evident. Branch banking is dead over the years. So I think going forward, it'll be super critical to have those products accessible to customers when they need it and at the time they need it, right? So it has to be very contextual of the kind of purchase they're making.
Thanks, Prateek. Let's change gear from banks to fintechs for now. I mean, fintechs are well known for two things. One is innovation, the speed at which they create new things, especially how they tackle the last mile for the consumer. But they lack scale, they probably lack a corporate proposition, and sometimes they lack customer trust. Miguel, you come from the most profitable bank in the region. How do you think is the collaboration between fintechs and banks going? You think we've got an ideal marriage today, or there's a lot more work to be done?
So strategically, the way that Emirates NBD looks at innovation, right? Partnering and collaboration has been always what brought the most return on that, right? And there are typically two types of entities where we see that collaboration leads to innovation. One is with the government, and I have to say, particularly in this region, previously in my previous job as a partner with McKinsey, I've worked in many places. I've never seen a government as proactive in pushing innovation as the government here, and broadening the region. It's not just the government of the UAE, it's also in Saudi, right? But beyond the government, fintechs, right? So there are most of the great ideas and great innovations that come in financial services come from fintechs, right? The challenge for an organization like ours when dealing with fintechs is that we are two very different entities, right? We are a very big bank. We have many initiatives ongoing. We work at our own speed, and fintechs, of course, they are nimble. They want answers tomorrow. They want to engage with you. This is the engagement with you is probably one of the most important things for them, while for you it may not be the important thing at that moment. So the way we first of all, very important for us, we actually have a dedicated team, right? That is connected, not just here in the region, but in Singapore, Apex in Singapore, in Plug and Play in the US or in Europe. And in fact, we have a dedicated team to try to have the same speed and mindset in working with them so that we can onboard them as soon as possible to address opportunities that we find in the business. On the other end as well, I think we are very lucky. We have business leaders in the bank that understand the need to partner with fintechs. And so their openness when faced with a business problem, business opportunity, on not just having the invented here syndrome, we have to have something that we do ourselves, but actually reach out, is tremendous, right? So this has been working very, very well for us. The most important sectors have been payments. There is huge disruption in payments. Just yesterday we signed with the company Partior, actually a fintech which now is invested by Temasek, it's invested by JP Morgan, by DBS, and these guys want to become the world clearer. We not only partnered with them to actually use their clearing services and become the dirham clearer of reference for them, but we actually invested in them as well. So which is another way. We have put some money aside as a bank. We don't invest for financial gain purposes, but if we see an opportunity where we are going to bring value to them, and investing in them is also a way to make sure that they are successful as well, that we do so. So very important for us, strategic focus. The CEO himself and the ExCo are involved personally in these discussions around fintech engagement, so tremendously important for us.
Excellent. Ronit, you were, apart from the Citibank hat, you're also an active member of the Middle East Fintech Association. Do you agree with Miguel about the partnership? What is your counsel for both banks and for fintechs to improve this partnership?
It's the holy grail right now for the last 2, 3, 4 years, both on the bank side and particularly on the fintech side, to do partnerships. But it's really hard. And it's very easy for these partnerships to fail. Let me explain why. What is a fintech? Many banks, including probably the two incumbent banks on the stage, will say, we're a fintech because we use financial technology. We use technology to deliver financial services. But a fintech isn't just using technology. A fintech is going, in my head, from 0 to 1, the famous definition of a startup. Now, once upon a time, we, the banks, also did that, because once upon a time, we were small, we were born, we grew up. That was a long time ago for most banks. We're very good at I was going to say at a previous conference yesterday, I said we're very good at going from 10 to 100, but I think we're just very good at running at 100. Once we're at 100, whether it's Emirates MBD or Citi or JP Morgan or HSBC or Stanchart, we're very good at running at that speed. What a bank is good at is delivering consistently at scale with relatively low downtime services. Think of us like the electricity grid. Or sometimes people would say like the nuclear reactor that might blow up now and then, but we're like the electricity grid. We're not so good at the original spark. We used to be, but we're not, because it's two different skill sets to run the grid versus the initial spark. The fintechs are founded by people, often ex-bankers or consultants or entrepreneurs with no knowledge of finance who are like, something is broken. There's something broken I'm going to fix. They're the 0 to 1 guys and girls. The cultures usually don't fit. And that's really hard to, you can see some of the world's best institutions in investment banking, Goldman Sachs, for example, often considered the world's, one of the leading investment banks in the world. It was a struggle for them and Marcus. And I'm not picking Goldman Sachs, I'm saying, as one of the world's best investment banks, they struggled to get into consumer fintech. What should you do to fix this? If you're a fintech, 2 or 3 things. If you're a fintech in the audience, listen to this. Number 1, you have to believe, you have to have a little bit of craziness. Because if you don't have a little bit of craziness, you're not going to think all these massive, profitable institutions like Emirates MBD haven't worked it out, right? You've got to be a little bit crazy. But then someone in your team has to understand the language of finance and the mechanics of BAU technology. Because when you show up and you speak to the bankers in my organization or in Emirates MBD, you've got to be able to speak their language. So you need 2 or 3 people in your founding team. One is the crazy one, the disruptor. One is the translator. And then hopefully there's a plumber in there as well, one who can make. So then when you go to a bank like Emirates MBD, they have a team. Go and find that team, because they're going to be your biggest sponsors. Otherwise, you're going to get lost. It'll be like going into a big city in India as a foreigner and not knowing anything. You're going to get lost. You need a local guide, a Sherpa. You need that. Otherwise, most partnerships fail because of those reasons.
Good. Thanks for that, Ronit. Prateek, as the lines blur between banks, neobanks, fintechs, tech fins, the war for talent is heating up in the region as well. As a neobank, which started about 3 years back, how do you seek out talent, and what do youngsters need differently to work in a bank like yours, a neobank like yours?
Yeah, I think there's definitely a blur, right? I think the advantage we have is that we're more agile and possibly a little more attractive to the young professionals who are looking to do something more innovative, right? So from that regard, we have a slight edge over the traditional banks. I think what we essentially look for is multidisciplinary talent, right? Some of the key things that absolutely mandate is familiarity with analytics and data, right? That's a given now. If you don't have that, there's really very little you can do at the bank. Understanding, having financial literacy, understanding what the banking products are, have at least some understanding on how each product works, regulatory understanding. While building new products, whether you're an engineer or a product head, you need to have understanding on what the regulation needs. So I think these are some of the key skills that are now basically hygiene to get into fast-moving, fast-growing banks. I think what can support this is obviously the whole AI, next Gen AI revolution that's coming, right? They can help people focus on the skills they need. Maybe the tasks that are more mundane and repetitive can be done by Gen AI. It helps on the collaboration side. Some of the platforms that have been created really help expedite skills from that regard. So I think that is another big area. Yeah, and I think also from a growth point of view, it kind of addresses what skills people need to develop to reach what their aspirations are. So I think these are some of the things that we look for and what we kind of support our talent within our bank to help them kind of achieve what they need.
Thanks. Let me open the floor for some questions if there are any. Any questions from the floor? We're happy to answer. Yeah, there's one there. Microphone, please.
Thought we'd stun them into silence.
Maybe a little bit of introduction. Leon Vandenberg, I'm a Canadian, worked with US Treasury, was involved with the first smart cards, involved in the US. Europe was way ahead of them, and I see what Emirates and NDB, what this whole nation has done to digitize their finance platform is amazing. I've seen what the other side of the pond is not doing. They're not embracing this technology opportunity. Let's call it tokenization, let's call it digital asset classes, and they're really creating strong headwinds. And I really see a lot of companies are leaving the USA to re-domicile their headquarters in regions like Singapore or here in order to create real opportunities for this digital finance era. Embedding finance not just into apps, but into assets. So there's a new asset class that can be fully digitized. Instead of the petrodollar, we have the electrodollar. And I really see what China is doing with solar and batteries, leading the world to do this. And we need bankers to help us entrepreneurs in a panel at 11:10 bootstrap this industry and really lean into this multi-decade transition.
Sorry, what's your question, please?
My question is, how can these bankers on the stage embrace embedded finance and embrace this electrodollar theme as an asset class to enable fintechs to face a new commercialization opportunity? And how can you help the entrepreneurs get the debt and the combo of finance, the capital finance stack, so we can scale?
Yep.
Because we have strong headwinds, and we can't do it in the regions in Europe, and it's a real struggle to do digital in the USA.
Thank you. Ronit, can you answer the question, please?
Sure. So there was several questions in there. One is America, and is America falling behind, having created a lot of the modern world? And secondly, what are banks going to do? And I'm going to answer both questions by just quoting Winston Churchill. Americans always do the right thing, having tried everything else, and so will banks.
Okay, I'm going to just, we're running out of time now. Before we finish, I want to ask each of the panelists, we think of one thing that will transform banking in the next 25 years, by 2050. One big thing. What would that be? Start with Prateek.
I think the one thing would be to rethink the whole business model. The operating model needs to change. I think the current revenue streams will start drying up. Lines on cards interchange, on FX with the fintechs coming in. So I think the one big change needed would be to rethink the operating model.
Thanks. Miguel?
So from what you're seeing now on the ground, it's actually, and it sounds a little bit a cliche, but it's not when you look at the use cases that are being pushed forward, which is on data and analytics, right? So the bank, Emerson has been pushing very hard to embed in every business unit, close to the business leaders, the ability for them to explore data, explore these capabilities of new generation AI models and so on. And the use cases we are seeing and the impact they're having, particularly on moving the boundary of automation and decision-making, automated decision-making, beyond limits that we didn't think it were there before. It's huge, right? So I think the trend that is most defining now to what is happening in our bank currently, beyond the underlying digitization, technology transformation, and so on, is data and analytics.
So business model, data. Ronit, you have the last word.
Thank you. On the consumer side, agents, semi-autonomous agents are going to transform our lives. On the wholesale side, the role of the dollar. The dollar is going nowhere in the near term. On the next 5 to 7 year view, the dollar is still going to remain the hegemonic international currency. It's like English is everyone's second language, not their first language. Almost as many people speak Bengali, my native language, as they do English. No one learns Bengali as a second language. They learn English. The dollar is the world's second language for currency. Will that change? Not by 2030, but 2050? That's going to be the really big question in the wholesale banking.
Gentlemen, thank you very much for the lively discussion. Audience, thank you so much, and have a good rest of the day.
Thank you.
Thank you.
Gentlemen, thank you so much, and thank you for those questions. It's always good to prod the status quo and see what's out there. And as always, the panel will be available for further questions if you'd like to speak to them afterwards. So really good to hear. In summary, obviously we've had a lot to get through in this session, but breaking it down for the great advice that we've had. If you're startups, you need the disruptor, the translator, and the plumber, and also need to attract agile, innovative, young, multidisciplinary, regulatory compliance, and financially aware graduates or young people into the banking industry. And being an ex-banker myself, an investment analyst, I can totally agree with that, having sat through all those numbers. We're going to continue the theme now. We're going to talk about fintech, so we're going to build on this, fintech 3.0. It drives Web3 infrastructure and addresses regulatory challenges and, of course, fosters inclusive growth. We're going to gain insights now from UAE's pivotal figures on investors, regulators and banks as they chart a path towards global leadership in, of course, the emerging digital economy. FinTech 3.0, architecting the future of global finance. Joining me on stage is Mohammed Al-Balushi, the CEO of DIFC Innovation Hub. He's been spearheading key initiatives like DIFC Launchpad and the Dubai FinTech Summit. So come on up to the stage, Mohammed. I think you are around. And I'd like you to sit in seat number 2, please. Faisal Al-Hamdi, the managing partner at Further Ventures, chairman of Zero2 as well, and board member at WeoBank. So a nice connection there. Please come on to the stage. And Gaurav Dar, the group CEO of Marshall FinTech Partners and MENA FinTech Association, dedicated to fostering innovation in the FinTech ecosystem. And moderating this session, we've got Josen Raghubar, the chairperson at Ikineo Ventures, UVU Africa, and the Invest Group in South Africa, driving inclusive growth. So welcome back to the stage from yesterday. And we look forward to your panel.
Joining us. So as Rinit said from our last panel, before the previous panel was talking at large organizations that run at 100, we're really back in that 0 to 1 space. They're really exciting stuff. And today we're going to explore how fintech is evolving, where it's evolving to, and what are the leading people in the region doing in terms of positioning themselves as investors, as policymakers, as ecosystem builders, and operators in this new world. The region is really taken a long-term view on Web 3.0 or digital assets. There's been strong leadership from the region all the way through. Even though the hype has disappeared over the last few years, there's never been more on-chain activity. There's never been more people building in the space. And this region has really been at the forefront of doing that. So I'd just like to start off by some introductions about yourself and what your organization does, because you've been really at the forefront of pioneering an ecosystem of leading innovators, talent, regulators in the space. What are you seeing for fintechs that are really pushing the envelope and evolving into the Web 3.0 area? And how are you shaping the ecosystem at the DIFC to accommodate this and foster that?
Sure. Good morning, everyone. I represent an entity called the DIFC Innovation Hub. It's technically Dubai's fintech ecosystem, which is home to more than 1,000 fintech innovation startups. It's been an interesting journey. We started our fintech, let's say, roadmap back in 2017 when the entire industry was very nascent. We started with an accelerator program, and I think that kind of created a lot of momentum for us, and it has been a learning journey since. We I think it was at that time where we realized that when it, as a jurisdiction that was created to serve financial institutions and service providers, we realized that if we are to cater towards fintechs and startups, we have to think about it very differently, because the requirements of fintechs are different as opposed to financial services. A lot of these guys are very early stage, not much funding is available. There's also not much know-how also around being regulation, what being regulated actually means. And the culture that they bring, the culture they represent is different, so we had to cater to that. A regulator, of course, we have an independent regulator within the IFC called Dubai Financial Services Authority that operates a regulatory sandbox, which was created technically to power fintech and enable fintechs to flourish and grow from the DIFC. And honestly, over the past 6 years, all we've seen is growth. Year on year, I think, I still believe the fintech ecosystem is nascent in our part of the world. We just had our first couple of unicorns this year, so we've got a long way to go. But we've seen the potential that it carries. I still remember the days where I think in 2017, 2018, most of the startups would be teams of 2 or 3 young guys trying to create something. And now, if we look at the job creation or the contribution that's coming from the fintech sector, it's quite significant, and we're bullish on it. We believe it will be one of the major contributors. And we also invest in fintech companies. So along with the IFC and along with the Dubai Future Foundation, we have a fund called Dubai Future District Fund, through which we take equity positions. But also to enable fintechs, we take it upon us on also enabling capital for these fintechs by attracting other VCs, by building awareness with amongst family offices to look at this asset class and invest in this asset class. I think one of the key things that we take pretty seriously is how do we enable fintechs to connect with banks and of course regulators, but banks in particular, because those partnerships are essential for them to be able to prevail in the market. And again, I mean, going back to the discussion that was happening before the session, the banks are quite proactive in our part of the world. With all the major banks, we have partnerships with them where they continuously, refer to us and ask for our help when it comes to scouting fintechs that they could potentially work with.
Thanks very much. Faisal, you lead an organization that has really driving the strategic development of the fintech, but particularly the digital asset area. So it'd be very useful for us to share, why the region has decided that digital assets is an area they want to prioritize, invest in, and build in, and particularly which areas your organization focuses on, and particularly how you prioritize your attention and your capital.
Absolutely. Quick background on Further Ventures. Further is a VC fund based in the UAE, and we invest globally, focusing on fintech and digital assets. When we first built our thesis and conviction in the space, we thought about what are some of the challenges that a lot of the fintechs are facing today, which include things such as having sufficient capital to be able to be licensed, so regulatory capital. B, looking at how can they work with regulators on new policies that are still being shaped, and being able to bridge that gap. Thirdly, our partnerships. How can they work with institutions where they could distribute their product and become more scalable? So when thinking about these 3 pain points, we designed Further Ventures to become a co-founder and also investor in these companies. And we decided to focus on a B2B business model. So the question is, how can we embed our products with a bank or telco or corporate so that it becomes more scalable? And so far we have at least, we have 10 companies in the portfolio, and they all touch a lot of the banks in the UAE in the region and the telcos, by enabling them to offer novel products, whether it's fintech or digital assets. Quick list of themes, areas like payments. So how do you enable B2B payments using stablecoins? Areas such as how to custody digital assets, how to tokenize products, how to tokenize financial products, and distribute them through wealth management platforms. On the more fintech side, it's areas like SME lending, also wealth management. And we're seeing a lot of collaboration between the institutions and the fintechs from the portfolio. Now, to your point around digital assets, I think that we're quite fortunate that the UAE took the conscious decision about 6 years ago that they want to regulate the space. I think countries and governments have been hesitant, but I think the UAE said, let's regulate the space because the technology won't disappear. Let's learn how to cope with it and shape it. And that's why the likes of Central Bank, VARA, ADGM, DFC have all done a great job in looking at how to regulate the space. And one obvious proof point is around the stablecoins. So globally, not many countries were able to issue the frameworks and regulations of stablecoins, but the UAE did. And the central bank, the UAE, issued the regulations June of this year, and now they're starting to issue licenses to the market. And this is not something that happened overnight. This was 6 years of planning and working towards a vision of how could we enable blockchain as a technology from the UAE to the world.
Thanks very much. I mean, it's remarkable leadership that the region has shown. Gaurav, you're both an investor and you're an operator and entrepreneur, and you're particularly involved in very early stage funding as an investor. Often this Web 3.0 is seen as a hammer looking for a nail, and I'm sure you're seeing a lot of hammers, and maybe are you seeing sufficient nails? So I'd like to maybe obviously please introduce yourself and some of the themes you're seeing, but particularly I want you to give us your insights on real use cases and adoption that you're seeing, both Web 2 versus Web 3.
Sure. So, good morning, everyone. As a background to myself, I'm a second-generation fintech entrepreneur. So, as a family business, we've actually been doing payment technology across the region in 15 countries for 4 decades. So I think perspective, when we talk about this conversation, is extremely key. And what I'm trying to refer to is, if we talk about Web 3, there was Web 2, and there was Web 1.0. And with my exposure from my own background in working in payments for 20 years, what I've seen is, with Web 1, Web 2, Web 3, the other way you can look at it in context is local, regional, global. And I think it's this perspective that's extremely important for everyone that's here in the room today to actually understand, with how leading institutions, such as the 2 gentlemen here at the forefront, from 2 parts of the Emirates, are actually leading the way in changing the way the landscape of fintechs is actually now looking at a global perspective. Because from technology, looking at Web 1.1, Web 1.2, the expansion and opportunity for return on investors has also changed. There was no venture capital here 10 to 15 years ago. Why has that changed? Because it's not local, it's not just regional, we're looking at global. It's the first time, from the perspective of a very secure ecosystem, from a financial, political, governance perspective, that can foster the right elements for global technology players to actually call this region home. So that's the first thing I think that was extremely important to lay out as a landscape for everyone here to navigate from a perspective looking forward for the next 5, 10 years as an operator, as an investor, and people who are looking to call the UAE home base to operate not only in the region, but globally. Now, let me put a little bit more about that. The payments landscape was the first truly real opportunity for revenue generation or architecting Web 1.0. With the advent of the internet, apologies if this sounds a bit too obvious to certain people in the groups, with e-commerce and Web 2.0, you got regional takes, and that's what happened. Amazon came into the region, discovered these opportunities of scale which made sense to them and acquired Payfort. That was the first thing that started. And out of these companies came things like Tabby, right? So when you have companies like Tabby that can go cross-country, cross-regional, but be homegrown and become a $1.5 billion company in a span of 4 to 5 years, we couldn't do that previously. And what's happening with Web.3 is the opportunity to create multi-billion-dollar companies in the payments and fintech landscape is a reality. There's a number of operating spaces which are visible, and there are certain spaces which are invisible. If you look at my esteemed colleague and partner who was on the panel earlier, I do a podcast with him, Ronit Ghosh. When he talks about money, what is Web 3.0? It's programmable money. And in essence, moving money from one landscape to another landscape is actually the base foundation of how you can describe every part of fintech, whether it's lending, whether it's BNPL, whether it's transfer, remittances, account creation, products, wealth. It's the transfer of wealth, and it's the transfer of this programmable money. So setting with that context is where I want to just talk about what's happening here. The hammer and the nail is now an open canvas. It's not obvious anymore. The potential is global, and we're doing a lot of discovery. And that's why it's exciting for venture capital at this point. It's exciting to take high risk, high return, high reward, because you're not just looking at local, you're not looking at just regional. You are genuinely looking at global opportunities here. There is no boundaries as demonstrated by COVID for what you can do with a technology business. Previously, I had to have a team in the office. I couldn't have a team operating out of Poland or out of India and Sri Lanka and have that team service my entire GCC or my Africa teams. And I'm in a privileged position, which is why I can provide this information on a factual basis. This is not something that I'm bringing to you from a consultancy report. This is because not only do I have exposure from my own business where we are constantly looking to partner with fintechs, but create our own products and services. And at the same time, because of my privileged position, I've been lucky to invest in a number of fintechs and companies regionally and globally. Today, I have exposure to over 500, 600 companies in my own personal portfolio from my own personal capital. And while that's extremely risky, and some people say quite mad to an extent, I'm happy to say, it's because I enjoy the risk opportunity of learning and also helping operators who don't have perhaps the experience and tool sets of how to navigate this region. There was a folly with a lot of entrepreneurs who said, from outside coming in, saying that they could replicate models of operating this region. The region's very unique, and you have to pay respect to that. So it's been a very fun journey for me, seeing my 1.0, 2.0, 3.0, and I'm very excited to see what's happening in 3.0. If you ask me, particularly to your last question, what are the opportunities in 3.0? It's stable, and it's also global in terms of currency movement. Because, like I said, you've seen the financial centers of the region shift from place to place. I won't mention the previous countries which used to be the financial centers and hubs for this region, but it's very clear the UAE is the #1 secure and stable, forward-looking financial security hub for all products and services, whatever you can think of, for the region. And using that, Web3 from a macro point of view, blockchain and Web 3.0, stable currencies and cryptocurrencies, is the #1 use case of an invisible ecosystem you may never get exposure to on the volume of business in the billions that is happening right now, and again, daily. I can tell you for a fact it's happening because I have exposure to portfolio companies that are actually in this space. That's why I'm giving you this privileged information, because I'm a free agent. I can do that. Certain people with other respect to their positions cannot in different parts of the ecosystem. But billions is already transacting in the background. While we might not see obvious use cases to consumers, such as payments happening, that might be just the tip of the iceberg, and it's actually flipped. So this invisible ecosystem that's serving a global base is the real use case for Web3 that's already happening, and you might not even know about it.
I love that. So talking about some of these invisible, workings of the Web3 infrastructure, Fazal, in some of the organizations that you're exposed to and the work you're doing, how are whether they're business B2B customers or retail customers experiencing Web 3.0 without them even knowing about it, right? So they don't even know it's Web 3. I'd like to maybe explore some of that.
Yeah, happy to do that. I would like to double down on what Gaurav said. And stablecoins are definitely getting a lot of momentum, and the volumes are there. From our side, well, actually, let me tell you when I got my aha moment, because we all have our aha moments, and I remember this, clearly, when I was chatting with one of our portfolio companies called Fuse Finance. Fuse basically enables B2B payments, among other service lines, and they basically work with traders and specifically commodity traders who want to settle payments in stablecoins, so cross-border payments. And I have a friend of mine who is based in London, and he's a global trader of energy. So he trades jet fuels between the UAE and the world. And this gentleman told me that typically it takes 3 to 5 business days for a payment to be cleared through the SWIFT system. And when he realized that he can settle through a stablecoin, the payment is instant and cheaper. But cheaper not because of the transaction cost, it's cheaper because for that period of 3 to 5 days, he had to pay $200,000 per day for storage costs of the fuel. And if you add that up, that's up to $1 million of just storage cost. So with stablecoins, that disappears. So that was my aha moment in terms of how can stablecoins be used for B2B payments. And there's a real use case, they're like real customers. Now the question becomes, how do you shift that capital flow into channels that are regulated? And this is why, from our side, all our businesses are licensed by financial institutions or by regulators. And governments want to shift these flows from off-regulated markets to basically regulated channels. And I think as that happens globally, we're going to see a lot more adoption.
Again, I love that too. Our business operates a stablecoin for the South African rand and building out emerging market stablecoins across African markets, and certainly collaboration with the regulators has been super important from day one. So when we talk about regulation, and we talk about adoption, largely what we really, when you zoom out, we're really talking about trust. Right? Trust in from a regulatory space, trust in the system, trust in brands even, right? I mean, we talk about Web3 being trustless, but actually in the fullness of time, people will still like to trust brands and people that they are giving their money to or moving their money through. Certainly in the DIFC space, how we are creating the region is creating new markers of trust for the space.
So I think, going back to trust, the way things are designed, you would generally want a third party as the trustee who you can trust. And I think hence the establishment of an institution like the IFC or ADGM or VARA that plays the role of regulating and entrusting that organization to do a specific type of activity. So I think especially when it comes to financial services, if someone gets regulated, that's why we encourage people to get regulated, because it's only by regulation that you get the trust of people. Financial services has always been historically a highly regulated space. Hence, the future would require regulation, and it would always require regulation because you're dealing with third-party money. And I think that trust and that brand recognition will only come once you're regulated, and when you're regulated by a recognized regulator, I think that means a lot. And I think we've done that. We've within the UAE, you've got certain nodes that are regulating financial institutions, and let's say 3.0, fintech 3.0 institutions. There's a lot. We've been quite progressive as regulators, and to be able to move the needle when it comes to championing the future of finance. And we've made, of course, global. We've told the world about our ambitions. We want to be we want to be a global center for Web3, and it continues to evolve. Yes, this is an evolving space. I always tell people, and I usually ask a question as well. Tell me how many people know how to regulate Web3 as regulators. And I think it's a new space. Everyone's learning, so it will go through this cycle, learning cycle. But definitely, I think the more we have progressive regulations around it, the more we build trust, and the more we create success stories, not just in UAE, across the region.
I want to make sure we have some time for. I want to make sure we have some time for questions from the audience. But I want to spend a little bit of time talking about talent and attracting talent to the region and talent into this space, which is very nascent. I mean, the demand for this, for these types of skills and this type of talent is going to increase. How are we seeing good pools of talent in the region? Are we attracting people to the region for this talent? Certainly, maybe Gaurav, you can give us a start in that, and then Faisal as well.
Sure. So there's two types of talent which is actually being developed or being attracted to this region. First of all, let's not forget how young the Web3 space is. 2008, Halloween was the publication of what we know as Bitcoin. Today is a framework, celebration coming up soon. But 2014 is when Web3 was actually quite strongly established with the basis of Ethereum. We're only 10 years old from there. So when it comes to talent, I think the opportunity is twofold, like I referred to. Developing talent here for a global perspective on Web3 businesses is very real. But yes, every big name you can think of in the Web3 ecosystem has been looking to call the UAE home for the last 3 years actively. So out of the 10 years of Web3 being coined, 30% of, or for the 30% of the lifetime of the industry, which is a vintage now, you have all of them here. They're all coming here. And you can throw a name on a dartboard, and they bring talent with them, and then they nurture and develop local talent too. So this simultaneous working of local talent to actually become part of a very young ecosystem and learn, especially as many layer 1 protocols are still being developed, chains, multi-chain protocols now coming into play. There is so much happening in terms of talent. And with AI as well, it's another level. There's a Web3 company I will not name. They're one of the top 5, 10 in the world, layer 1. They have gone on a shopping spree in the hundreds of millions of dollars to purchase AI companies over the last 2 years, and they've relocated that talent here to the point where after 12 months, their layer 1 protocol now operates at something like 8x better than when it used to. Is cheaper, is faster because of compression technology and new security protocols they've embedded. So it's happening here, and it's astonishing. And this is why I'll go back to saying it again. These are global companies calling the UAE home. Web 3.0 is the first real opportunity with all the stars aligned for this ecosystem to do everything global, not just regional. So it's super interesting. The same applies to talent. They all want to live here. The lifestyle is fantastic. My family's been here for 52 years. And we'll continue to call this home for a reason. So no surprise.
So from our side, I'll be a bit more broad when talking about talent, because we see, as Gaurav said, people, companies from all the world coming to the UAE because they see the edge when it comes to being part of an ecosystem that understands the technology and has the regulations to support it. So if we break them down in terms of global institutions, and I'll say what's public, so we know that Franklin Templeton has plans to issue a tokenized money market fund in the UAE. And there are several others out there that are following suit, like Paxos and Coinbase. So I think institutions see that this part of the world is where they can adopt their novel products, and hence talent moves here with them. Secondly, you see that all the major exchanges in the space are in the UAE, and specifically Dubai. And I think we did a good job in attracting the exchanges here. And thirdly, founders. We all know founders that moved from the US, Europe, Asia, because they see the momentum and capital regulations interest. So I think we're quite fortunate in having that.
And just to add on that, yeah, so Dubai and the UAE are emerging as global talent hubs. And it's not just by luck. Yeah, there's a lot of thinking and a lot of planning behind it, a lot of initiatives. So I mean, we continuously work on as to how do we attract talent to Dubai, and how does this become a global hub for talent? Because if you think about Dubai, we've not been historically producers of talent, but consumers. I mean, we import talent, and of course we want to double down on that. But we are also now taking developing talent or upskilling existing talent very seriously. I myself have a mandate on that, and we're seeing the results. I think our mandate is to make sure Dubai becomes one of the top talent hubs globally in this space. Yeah.
Incredible. So before we completely close, would love to welcome some questions from the audience. There's one right over there. There's one over there. So let's start here and then.
Hi, everyone. Thank you so much for an informative session. My question is regarding, since the topic of the summit is next gen, I wanted to know what advice do you have for young investors who are looking to invest in the fintech world? And specifically, what would you say that they should consider when they're looking at the relationship between fintech and the needs and the values of Gen Z and beyond? Because we always have to consider what will be relevant in 20, 50 years onwards.
Before we answer that, let me just take the second question.
Oh, okay. I need to ask a question. Hey, I'm Giri. I'm from the US. I head a technology company. I've been in financial services, JP Morgan and US Central Bank for 20 years. One of the big question that I had with FinTech 3.0 is central banks are coming with CBDC. I want to understand how that impacts the commercial thing, because crypto is still evolving for the last 20 years. So how is CBDC going to impact the regular stable coins and other markets?
Excellent questions. So maybe, Gaurav, you can tackle the first one is, what advice would you give to young fintech investors? And how does that align with the values of this new generation, Gen Z?
I'm happy to have an extended conversation because it's quite a large, broad question you've asked. But if I was to try and boil it down, being time sensitive as much as possible, two big aspects we have to look at. What are your expectations and how much can you risk? And you put that on a sliding scale. So you see what's available to you. Are you able to risk 100% for zero return, and do you have that appetite? And are you looking at a short-term investment or a long-term investment? The advice I would give is try and diversify your portfolio of exposure as much as possible. Try and break it up into 6 or 8 segments of 20% of your savings or 25% of your savings, looking at a 5-year outlook. If you can split your outlook between a short-term review, annual, what assets do I have annualized that I can liquidate versus assets when I invest in them that are locked in for a period of horizon, and then you weight your risk profile of your appetite of how much I can lose and how much I cannot lose. And then what you'll see is annually you'll see a balance. You'll see a balance of your performance of your portfolio to understand the weightage of what kind of segments are proving to actually work. Because the high-risk segments are unproven, but if they scale quickly enough, you have access. So the first thing is having access to the right kind of investments that you can make that are liquid or illiquid. And once you are conscious of that, you'll see how you have access to those investment pieces. And then taxes is another thing that you have to also keep in mind with regards to your domicile residency. So tax, short-term, long-term, access to capital, looking at 1, 5, and 10-year returns on your portfolio. So if you're looking at categories of stable coins, meme coins, things which may be high risk, yes. If you're looking at incremental returns, you might do things like EFTs, which you can get access to through your own banking app. So even Wio, for example, on their stock exchange, Sarwa, Waha, a number of products in the region and globally give you access to EFTs as well. So you get exposure to a basket of goods. But I don't want to take up too much of time. We'll get into these things later, depending on your capital you want to do. So Gen Z, and sorry, in what context?
How do these new, I guess, investments of fintechs align to the values of Gen Z and the needs?
Well, Gen Z at the moment, I don't know how much capital Gen Z has to deploy in terms of what they've created in wealth. So I would say, depending on what your balance is for Gen Z, the opportunity is massive. But unfortunately, so is the risk. So it's always down to your risk appetite.
Yep. Just on the second point, I think honestly CBDCs coming into play is integral to the entire ecosystem of digital assets and crypto. I think it's only when CBDCs come into market there will be wide adoption of digital assets and virtual assets. So I actually believe it's a good thing, and it will enable the entire industry even more. Yeah.
Fazal, do you want to add to that?
Yeah, my 30 seconds on this. I think that CBDCs and stablecoins will coexist for different use cases. Governments will use it for wholesale payments and how they process transactions with the local banking ecosystem. And I think that stablecoins will be used by private companies for things like cross-border payments or retail payments. So I think there's a world where they both coexist.
Thank you very much. We've had a fascinating discussion and appreciate your valuable insights and appreciate your attention. Thank you.
Thank you so much. It's really fabulous to have these practical sessions, giving you a good investment landscape there, and also talking not only about the excitement of what's out there, but the role of regulation. Super, super important, because of course ultimately that builds and impacts the trust that we've heard talked about here as well today.